Current trading data indicates that the Nasdaq is currently closed, with Strive Inc., ticker ASST, finishing the last session at exactly $1.05 USD. The stock recorded a modest intraday gain of plus 0.015, plus 1.45%, stabilizing after a period of intense volatility that has defined its chart for the better part of this quarter. While the after-hours market remains quiet, with no significant movement from this $1.05 level, the psychological weight of this price point cannot be overstated. We are looking at a stock that is currently hovering just above the critical $1 compliance threshold, a level that often serves as a battleground between institutional accumulation and retail capitulation. Expectations for Strive Inc. right now are heavily skewed by the public headlines. Most casual observers and retail traders see the name Strive and immediately associate it with the high-profile anti-ESG narratives or the political celebrity of its co-founders. They expect the stock to trade purely on sentiment, acting as a proxy for the broader anti-woke capital movement, or, more recently, as a speculative bet on its newly adopted Bitcoin treasury strategy. The assumption is that this is a meme stock in the making, destined to fly or die based on social media hype cycles alone. The reality, however, is far more mechanical and intriguing. What we are witnessing at the $1.05 level is not just sentiment trading. It is a structural standoff involving convertible debt arbitrage and a complex integration of two completely different business models following the merger between asset entities and Strive Enterprises. The market is currently pricing in a show-me discount, effectively treating the company's ambitious pivot to a Bitcoin-backed balance sheet as a distressed asset play rather than a growth story. While the expectation is for explosive, headline-driven rallies, the reality is a methodical grinding of the share price against heavy sell walls, likely constructed by legacy shareholders from the pre-merger asset entities era looking to exit their positions. This disconnect between the grand vision of a Bitcoin treasury and the gritty reality of penny stock liquidity mechanics is where the actual opportunity and risk lie. Analyzing the recent price action, the $1.05 mark is deceptively calm. If we look back at the intraday chart provided, we see a distinct gap down at the open, followed by a sharp recovery that reclaimed the $1.04, $1.05 zone. This V-shaped recovery on the daily time frame suggests that there is aggressive bidding support stepping in every time the stock dips below $1.02. Someone, or some entity, is defending the $1 line with conviction. This is crucial because in the world of Nasdaq microcaps, falling below $1 for an extended period triggers delisting warnings, which can lead to a death spiral of financing. The fact that ASST is being defended so vigorously here implies that the capital behind the recent merger has a vested interest in maintaining compliance to facilitate future capital raises. However, the volume profile tells a cautious story. The buying pressure, while present, is not yet overwhelming the supply. We are seeing what technical analysts call absorption, where large sell orders are being passively eaten up by buyers without chasing the price higher. This often happens before a breakout, but it can also precede a breakdown if the buyers run out of ammunition. The chart shows a ceiling around $1.07, a level that has rejected price advances multiple times in the last 24 hours. Until ASST can break and hold above $1.10 on significant volume, we remain in a consolidation box. The wick activity, those thin lines extending down to $1 and bouncing back up, confirms that the volatility is being driven by liquidity gaps. In simple terms, there aren't enough shares available at specific price points to facilitate smooth trading, leading to jagged, jerky price action that can shake out inexperienced hands. Now, let's address the elephant in the room, the business itself. What exactly do you own if you buy ASST at $1.05? This is no longer just asset entities, the company that focused on Generation Z digital marketing and Discord community management. That business still exists, providing a baseline of digital infrastructure and community building services. But the narrative has been completely rewritten by the reverse merger with Strive Enterprises. The new Strive Inc. is explicitly positioning itself as a Bitcoin treasury company. This is a model popularized by MicroStrategy, where the company's primary corporate mandate shifts towards accumulating Bitcoin on the balance sheet, using equity and debt issuance to fund these purchases. It's a levered bet on crypto, wrapped in an operating company. The excitement around this model is why we saw the stock spike to highs of nearly $13.40 earlier in the year before correcting. The current price of $1.05 represents the market's skepticism about their ability to execute this at a smaller scale. Unlike MicroStrategy, which had a massive software business to generate cash flow, Strive is building this plane while flying it. They're merging an asset manager, Strive, with a digital marketing firm, Asset Entities, and overlaying a crypto treasury strategy. It's a complex, and the market hates complexity, which explains the steep discount we see today. Now, let's address the elephant in the room, the business itself. What exactly do you own if you buy ASST at $1.05? This is no longer just Asset Entities, the company that focused on Generation Z digital marketing and Discord community management. That business still exists, providing a baseline of digital infrastructure and community building services. But the narrative has been completely rewritten by the reverse merger with Strive Enterprises. The new Strive Inc. is explicitly positioning itself as a Bitcoin treasury company. This is a model popularized by MicroStrategy, where the company's primary corporate mandate shifts towards accumulating Bitcoin on the balance sheet, using equity and debt issuance to fund these purchases. It's a levered bet on crypto, wrapped in an operating company. The excitement around this model is why we saw the stock spike to highs of nearly $13.40 earlier in the year before correcting. The current price of $1.05 represents the market's skepticism about their ability to execute this at a smaller scale. Unlike MicroStrategy, which had a massive software business to generate cash flow, Strive is building this plane while flying it. They're merging an asset manager, Strive, with a digital marketing firm, Asset Entities, and overlaying a crypto treasury strategy. It's a complex, and the market hates complexity, which explains the steep discount we see today. Now, we need to discuss the area of short selling. In recent weeks, online discussion boards and financial forums have been lighting up with debates about manipulation in ASST. Let's look at the data. When a company undergoes a reverse merger and pivots to a sector like crypto, it acts as a magnet for short sellers who bet that the hype will fade and the fundamentals won't catch up. Currently, we are seeing elevated cost-to-borrow rates for ASST shares. When the cost to borrow spikes, it means that the supply of shares available for shorting is drying up. This can sometimes act as a precursor to a short squeeze, but only if there is a catalyst to force the shorts to cover. Investors need to be vigilant about fails to deliver (FTD) data. In microcap stocks like this, high FTD numbers can indicate that market makers or short sellers are selling shares they haven't arguably located, anticipating they can buy them back lower later. If Strive Inc. announces a significant Bitcoin purchase or a new strategic partnership, those short sellers could be trapped, forced to buy back stock in an illiquid market, which would send the price vertical. However, the flip side is equally dangerous. If the company announces an equity offering to raise cash, diluting shareholders to buy more Bitcoin or fund operations, the shorts will be vindicated, and the price could test new lows below 80 cents. I want you to pause for a second and think about your own stance on this strategy. Comment below. Do you think the Bitcoin treasury model is a brilliant way to build value in 2025, or is it a desperate attempt to pump the stock price? I want to see how many of you are actually buying the vision versus just trading the volatility. Let's move to the reality of the institutional landscape. While retail investors are arguing on Reddit about short ladders, the institutional flows are telling us something else. We are seeing early signs of rotation. The merger has brought in a different class of investor, those interested in political capital and alternative asset management. Strive's asset management arm, known for its unapologetic capitalism and refusal to bow to ESG mandates, has a dedicated following. This brand loyalty is an intangible asset that does not show up on the balance sheet, but provides a floor of support from investors who are ideologically aligned with the founders. This is rare in the penny stock world. Usually, investors in sub-$2 stocks are purely mercenary. Here you have a base of shareholders who view their investment as a political statement or a vote of confidence in the anti-ESG movement. This limits the downside risk somewhat, as these holders are less likely to sell on panic. However, the macroeconomic pressure cannot be ignored. We are late in 2025, and the broader market is grappling with interest rate policies that make levered beta strategies expensive. If interest rates remain high, the cost of servicing the debt Strive might take on to buy Bitcoin becomes a heavy burden. The company needs Bitcoin to outperform its cost of capital significantly. If Bitcoin enters a prolonged bear market or sideways chop, Strive's treasury strategy turns into a liability. The stock at $1.05